My first question is to Horst. You mentioned your investment strategies in 2007 was lending money to cash staffing developers at 30% interest rate. Is that investment model, that strategy will still work in China, given nowadays there's abundance of liquidity into the market, and what you see that future trends for investors coming into China?
The future trends, yes, we still do bridge loans, unfortunately not at this high interest rates, but we're still performing to what we promised investors. It's now 22%, but it's not that many opportunities. Also because many of these developers, from these small-time developers, either have disappeared or they managed to get an IPO going. And from our original bridge loan, we made basic investments into the firm and then IPO'd the companies. We had 6 of those in the last 2 years. There are over 50 Chinese real estate developers on the stock exchange in Hong Kong, and they're pretty well funded. Where we saw our opportunities, and again looking back to the hedge fund theme we have, is that in 2009 many of the international investors had dramatic changes and needed to get cash to satisfy redemptions and so on in their funds. And we had some very many attractive situations where you could go in because everybody was concerned how the market is going. But in last year, Mrs. Tang mentioned the number, 160 billion was the total market, and about 15% is foreign investment, about 20 billion. So it's not more. And one other interesting number is why there is still a lot of opportunities. You all know about these huge developers like Wanda and these famous names, Xiao Mao and so on. They, I think, only make like 20% of the entire market. The rest are all smaller time developers. It's very interesting.
Perhaps we talk about urbanization that driving the demand for residential, and this is a big trend in China. And as the audience been sharing, this urbanization and housing demand will going to be sustained and will continue for another next 10 years. But as the urbanization drives, also the big trend is the rise of the middle class, and this macro trend also drives the retail sector development. My question to David is that I guess you mean 20 years ago, you're probably coming to your first job in China is developing a hotel, because that time is the hospitality sector goes, and then you develop residential, mixed-use project. So how's the retail sector in China? Seems like everyone's talking about this is probably the last spot of growth.
Yeah, and I think with the retail sector, yes, it's a huge opportunity, but a lot of, I think the domestic developers have struggled with retail because it's not just a case of building a retail centre and the people will come. And I think it's understanding the city's demographics, understanding location, and understanding what it is as a product. And you've got to have the right kind of tenant mix, you've got to have the right kind of offering. So in a way, the leaders of the pack in the retail sector, I suspect, will be the foreign developers investing, the likes of Singapore and Hong Kong developers who have those skills and that sort of knowledge at delivering these types of projects are probably going to be setting the benchmarks in China.
In your dealing with these local developers, how, because they have been very catching up, or already been very sophisticated in developing residential projects. How far they are in the chase compared with Singapore and Hong Kong developers in developing the retail center in China, the local boys?
Of course, I mean, that knowledge transfer is going to take place, and you are going to see the domestic developers learn very quickly, I think, and become big players in their own right. But that really, I still think, is yet to happen.
Over the last 5 years, China's been kind of very hotspot for inward investments. Now, whether this is come to the time that China is exporting capitals to global real estate market, and I wanted to ask our lawyer here whether there's any regulations governing how local foreign private equity asset manager to raise money in China, and how you see the regulations will be emerge in future for domestic capital investing for outbound investment.
That's a difficult question. Okay, let me answer the second question first. So your question is whether there are any regulations which restrict domestic developers to go outbound investment. As far as I know, I didn't see any regulations in this respect. Actually, Chinese government encourage domestic companies to go outbound investment, especially in like oil industry, like natural resources industry. There is no special rule actually on whether a Chinese real estate developer can go offshore market. So I believe that probably in the future they will go, because it's a lot of the real estate development market in China is very, very competitive. So if they found a good opportunity in a foreign country, they would love to go because they have enough of cash, they have money to do development. And actually, Vanke actually has become the largest real estate developer in the world. And some company like this types, like this size, probably they will definitely go out someday. The first issue is about whether PE funds asset manager companies, they can set up like what kind of
asset management company.
Asset management company. I think it's okay to do that now because we have a lot of foreign invested asset management company in China, and the difficult part probably is about RMB fund. So now a lot of fund is do like they set up a short offshore fund and then use this offshore fund to invest in China. So the next step is what the investor would like is they set up an RMB fund, onshore RMB fund, and use that fund to invest in China. RMB fund, there's also some new regulations come out, and gradually the government has opened its policy to allow RMB fund to set up. But there's still some like approval process to control how much capital can flow in.